So today I thought we'd make an updated and dedicated video to PayPal stock. It's been a while since we've done a video on PayPal, so I thought today would be a really good day. After yesterday, the stock briefly broke into the $59 range. Actually, I think it actually got to the $58 range at one point yesterday, which is pretty incredible. And today we're going to look at PayPal. Is it the number one stock right now to be buying on the stock market? And the answer to that for me is potentially. It's between two of them. Now, what I do normally at the start of the year is I normally give you guys the number one stock I'm buying for 2026. And right now I'm processing which one that's going to be. I think last year I said to you guys AMD was my number one stock, but this year, what's it going to be? And PayPal could be the number one stock for 2026. It's between that one and Adobe. Both of them, in my opinion, are way too sold off and still financially performing very well. And that leads us quite nice to start off with PayPal. I cannot believe that PayPal is touching the $50 range now at the moment, high 50s. Because when you look at the financials, you'd be thinking, what's caused this to perform so badly? You look at PayPal stock, year to date now, PayPal is down 30%. That's quite a significant underperformance to the S&P 500, which has had a brilliant year. And if you're sitting in PayPal right now, you're like, it's a bit tough looking at this and seeing how much the market's performing. And you'd be thinking financially something's gone wrong for PayPal. But then you go look at the financials and you look at the chart and you pretty much have the clearest picture you could see of revenue going up in the right direction and profitability going up in the right direction. If you were to go from 2020, the revenue on the company was 17 billion. They're now doing 32 billion in revenue. The profitability was 2.4 billion. The profitability is now 4.9 billion. So revenue and profit have significantly increased during that time frame. But then you're looking at the stock price from 2020, and the stock previously was $192, and now it's a $60 stock. And like we said, financially, you're looking and it looks like a pretty nice consistent uptrend on the revenue and profitability. And this graph actually summed it up very well. Is when you look at the PayPal stock price and you compare that to the operating profit, look at the difference between the stock price and operating profit performance. That operating profit performance has steadily been going up, and yet look at the share price. It's collapsed and it's just stayed down there, whereas it just continues to go up and up and up. And that's where you have the big disconnect. And I love those opportunities. I love the opportunities where the market puts the valuation, the share price at a disconnected to its financials. And for me right now, that is certainly the case that we have going on with PayPal, and it's why I'm considering naming it my number one stock for 2026. I am at the moment considering what was a mid-sized position, bumping PayPal up to a top 5 holding, even potentially a top 3 holding. Now, I did actually used to have PayPal as a top 3 holding. I started buying PayPal originally around the back end of 2023, and the stock would go on to rally a significant amount. We ended up selling PayPal out for some decent profit. Originally sold it just because I saw some of the metrics turning in a bit of a direction I didn't like, and the valuation made sense. So I thought, you know what, I'm going to walk away from this stock. And I expected maybe a little bit of a pullback, but what has really surprised me is from the start of the year where it was $90 stock has now fallen this much again, and yet financially they've actually, all the concerns that I previously had why I sold out have actually gone, and the stock is actually moving up in the right direction as well. Now PayPal, I'm sure all of you guys watching this video know what PayPal is. It doesn't need that much introduction. It was one of the first fintech platforms out there that you would use for online e-commerce, sending money to people, bit of payment protection. Now the problem that you had with PayPal is basically they stayed too stagnant. They used their leader position, their first mover advantage, too much. And what they ended up doing is they didn't adapt the company, enter into new products, so they were slow into the new spaces. And then as well, they increased the prices, the money they were taking, trying to fleece the consumer more and more, or the customers more and more. And basically, the competition caught up with them. The competition undercut them and moved into the new categories faster than what PayPal did. And PayPal hit a brick wall where it eventually, for fleecing its customers and trying to milk them, got caught up, and that's where we see PayPal had its decline really in the last few years. Fast forward to around about the back end of 2023, we get a new PayPal. Alex Chriss comes in, and originally the market loved what Alex Chriss was doing, and then all of a sudden it has sold it down. But I got to say, when I look at what Alex Chriss has been saying and what he thinks the next steps of PayPal are to do, to me, it looks like he has been executing on those things. And that's clear when you look at the recent financials. We had a lovely EPS beat, revenue growing at 7%, which is actually accelerating as well. So you get a nice double beat. Total payment volume growing at a nice healthy 8% rate. And then they also ended up hiking up the guidance, which is brilliant. So you're getting the company delivering on triple beats and accelerating revenue growth, which is pretty impressive. And what you see is what Alex Chris laid out on an investor day. It is starting to show in the financials. You start having things like branded experiences total payment volume up 8%, which is great. That was an area that was struggling previously because it had to go to a lot of unbranded checkout through its acquisition of Braintree. Now, that's great because you're still taking the money, but as an unbranded checkout, so for you guys that may be not aware of that, so branded is where you go onto a shopping site and PayPal's there and you check out through PayPal. Unbranded is where you go on to, let's say, Nike, for example, and you check out through Nike, and it looks like the payment system is just a Nike payment system. Realistically, Nike are not there to create a payment system. They're too focused on making the next shoes and everything like that. In Nike's case, even maybe turning the business around. But with PayPal, they give them the unbranded checkout and it's done. Now, you make money from the branded compared to the unbranded checkout. So the unbranded checkout has been a growth driver for them for a while, but if we want the company to do well, the branding needs to do well because that's where they make the lot better profit, and you get profit growing faster than revenue. And that's been the case. Branding has increased a significant amount. Venmo, so many people in the US use Venmo. People probably are not aware in the UK how popular Venmo is. If you're going to send someone some money, you're going to Venmo it to me. That's what they do. And so many people use it in the US. But they didn't monetize it, which is mental. So now they've realized, hold on, we can monetize Venmo a lot better. And now you have Venmo revenue growing at 20% as well, which is great. You got PSP also growing up 6% as well. And you've got EPS growing faster than revenue at the moment, which is great. Now, if we go back to PayPal's Investor Day, which there was clear things of winning checkout, growing Venmo, you can see here from 2024 to 2025, the improvement of that starting to come in. And you can see the branded experiences total payment volume, the acceleration that's currently going on there, which is great to see at the moment. Now you have buy now, pay later, which is an area that they've been expanding into, a little slow to expand into, but they are doing now. And you can see here the total payment volume growth in this space has been 20%, which is great. You look at the Venmo, we talked about this earlier, revenue growth of 20%. So much good growth here from the likes of the debit card growth here, pay with Venmo, and that's increasing very good rates. And look at the improvement from 2023 to where they are at in 2025. And as that comes a bigger part of the business, that's going to accelerate the revenue as well, which should be great. And they've got all these other areas that they're moving into, like PayPal World, Argentic, ads, crypto, which once again, so slow to move on. But these can be, great drivers for them going forward. Now, one of the negatives I always see with PayPal is active accounts. People say, oh, well, they're not growing active accounts. That's one of the big negatives, whether it's on YouTube, on X, people always say about active accounts. And I don't care about active accounts. I'll be honest with you. When you're a company like PayPal and being around for so long, it's very hard for you to grow your active accounts, really. And the other thing as well with active accounts, it's a metric that isn't a great metric to see if the business is healthy, right? Because, for example, if PayPal went out and they said, oh, if you sign up to PayPal, we're going to give you $23 and when you sign up, what would have to the active accounts? They would boom up. But is the business any better because of that? No, you're just paying people that don't want to use an account or have it somewhere else. There's no point in that. So that's a number that you could easily change or manipulate into what you want it to be. The key thing is you want to be looking at, are people using the products more and more? That's because they've got so many on there. That's what you want to be looking at. So that's a negative that I always see people put out, and I totally disagree with that negative. But even so, the active accounts have actually been increasing instead of decreasing recently as well. When we look at the business as a whole, so you got branded experiences, 8%. If you look at Q4 in 2024, it's accelerating. Venmo, 8%, now 14% growth, accelerating. Now, if you look at this here, that's now 19% of the business. Same again, if that keeps growing and growing and growing, bigger part of the business, that's going to accelerate the revenue growth. Branded checkout online is staying about flat, which is okay. It would be nice to increase that a little bit, but still not too bad. P2P and other consumer as well, that is currently growing 11%, and that's been accelerating. Payment service provider, so this is the unbranded, that has decelerated slightly, which would be good if it went back up to 10+% growth and does make up a good chunk of the revenue here. But you can see from where they were at the start of the year, which was one of the concerns that I had, was how big of a slowdown unbranded were having, and it does make a significant amount of business up. That has started to reaccelerate again. So that's actually quite a positive. And that's the story when you look at the numbers of PayPal's. Reacceleration is the word. You know, branded online, reaccelerating. Venmo, reaccelerating. Branded checkout, okay, that is staying stagnant. I'll give you that one, but it's still okay. P2P, accelerating. Payment service provider, accelerating. So all the numbers here are to like. And that was clear in the last earnings that these numbers were actually really solid from PayPal. And yet from the last earnings, which came out on the 28th of October, all that has happened with PayPal is the stock has gone lower and lower and lower. The stock's dropped 14% since these earnings that showed a lot of re-acceleration in the business, which is just absolutely mental. Now, on top of that, I thought I had a screenshot of this, but it's disappeared somewhere. I am going to try find it very quickly while talking to you guys. So they've got a strong capital return program with $6 billion expected in repurchase program and dividend. Now, the thing is that when you are PayPal and you are a 56 billion market cap and you're buying back 6 billion of the stock, you're buying back 10% of the company. And that's when you look at the shares outstanding. Look at the shares outstanding down here. Look at the big decrease on shares outstanding. That's fantastic. You as a business owner, shareholder, as these shares are getting purchased and taken off the market, you're owning more of the business. Your stake inside the business is increasing because of these shares being decreasing. And that's also led up to another thing where you've got revenue growing at good rates, profitability is growing faster, but then you're also seeing these lovely EPS numbers coming out as well because there's less shares outstanding. And then overall, you lead to a valuation where PayPal is now sitting at 10 times forward earnings. Incredible, isn't it? 10 times forward earnings for a company re-accelerating, growing at 7% a year, EPS growing even faster at 14%. Is it that we said earlier on in the video? 15 to 16% on non-GAAP EPS. Yeah, it's unbelievable to see. And for such a consistent revenue and profit performer as well, and the profit margins they have, 15% profit margins. This is such a healthy, profitable company. You look at the balance sheet here. The balance sheet is solid. They've got about 50% debt to equity, but with the debt, they've got enough cash on there to pay the debt off overnight, which is absolutely amazing. So there's no concern there. Look at the numbers next year. We're expected to go up to 6% growth next year. I think they'll be targeting 7% growth. EPS is expected to grow nearly 10% again, so growing faster than revenue. So you got about 10% profitable business here. That means the profit margins are going to be expanding, and we've seen that recently with PayPal. If you do look at PayPal's profit margins, they have actually just started. So you can see they were about 14% profit margin at the start of 2024, now pushed up to a 15% profit margin. It's pretty incredible. Now, some of the negatives why the stock might be down, the latest earnings, they did mention that the basket sizes has decreased recently, once again post to the macro environment. And I guess, with PayPal, I guess if you were to enter a recession, it would have a bit of a whack. But as I always say, if you look at every investment from a point of view of it's going to get hurt in a recession, you probably wouldn't end up buying any stocks on the stock market. So I guess that's maybe one little negative there, that they are seeing a slight slowdown in the economy. But can that not be said for a lot of companies? And that would affect so many companies out there. The other thing as well that I've recently started to see mention is insider selling. Now, I do look at the insider selling, and I don't think there's actually any key roles that have been. Ironically, one of the roles is senior key executive. But there's not really any big positions, I don't think, in the company, like independent director, global markets, independent director. So they're not like the CFO and the CEO, really, overall. And as we know, people inside the business sell for many reasons. The kids might be going to college, they need money, they're moving house, might need a new car. And some of these also get a lot of the compensation through stock-based compensation. So, for example, if you look at the CEO, Alex Chris, he gets roughly a 6 million salary. 1 million of it is actually in salary. The next is through compensation. So you've always got to consider that. Now, there's a couple of things that I would like PayPal to do slightly better. We did kind of cover it through the last, when we looked at the numbers, like branded checkout online just creeping up a little bit. Maybe unbranded get back up to about 10% growth, and that would accelerate your growth rates then from where you're at the moment of like 7% growth to 8-9% growth, which would be absolutely amazing. But I would love to see the share buyback that we currently have at the moment going on, which is a significant amount, accelerate it. Just buy back stock at these levels, because the amount of stock that you can buy back at these prices and obviously then increase your EPS, it's a great valuation to be buying back. So I would be accelerating the share buyback at the moment. The other thing is really to give some more confidence to the market and the shareholders in potential is Alex Chris himself. He's obviously done there's a lovely photo of Alex Chris. There we go. He's done a great job, but with the stock dipping and dipping and dipping and the financials seeming to be improving, and he seems very optimistic around what is going on, go buy some shares. I mean, obviously it's not my place to say he should be buying shares because it's his money at the end of the day. I can't tell him what to do with his money. It's like one of you guys coming on my YouTube videos and commenting, oh, you should be buying so-and-so. Why? It's my money. I get to buy what I want. Yeah, you can't do that. But it would be good. It would be good. Even if it was like half a salary, 500k worth of shares, that'd be a big statement to the market. And just something like that, sometimes that's all you need to do. Like if you combine it with like accelerated share buybacks and increasing the position, sometimes that's all you need for the market to turn and the stock price to turn. Financially they've been doing as good as what they could do, but yet the share price has just been going lower and lower. And sometimes all you need is a couple of positive news stories. The stock bumps up 10, 15, 20%, and people just flood on and buy it. That's what they do. They chase the stock up and all of a sudden go, oh, the stock's up, so this is amazing. Look at the financials. When it's exactly the same financials as when it was going down. Sometimes just the change in the share price can get people piling in. Look at the like of Google. Google at the start of the year, look how low it had got, and it had financially been doing amazing. Doing exactly the same financials now, but the stock is, 2x since that time frame. And the reason why is just because the sentiment changed around it because the stock price went up. AMD, they're doing about the same financials as what they were doing at the start of the year, and the stock price is 3x since that time frame. No difference in the financials. It's just the share price has gone up, and now people are chasing it because the stock is up. And, yeah, we're going to buy the stock now. And that's what a lot of people do in the stock market, especially the analysts. They just chase the stock prices. So something like that would be, really good. But obviously, I can't tell Alex Chris what shouldn't do with his own money overall. Yeah, that's PayPal overall. We're just going to run some numbers really quickly because I know some of you guys like seeing some numbers about what the potential upside could be. So I put 3, 5, 7% revenue growth in. I have factored in a slight share buyback on the bottom number. 14, 15, 16% profit margins. So when you look at the profit margins, they're at 15% right now. So my low side factors in a little bit of decreasing profit margin. The high side is that obviously, as we see, the profit is expected to grow faster than revenue. So profit margin expansion, and that would be up to 16%. So I would say that they probably will come somewhere between 5 to 7% growth, and I would expect them to come somewhere between a 15 and 16% profit margin. So I would expect them to be somewhere on those middle numbers realistically. I'd be a bit disappointed with these low numbers. But, first of all, I'll say, so I've got it at 20 times earnings. I think that a company that has this amount of growth, which is about above the S&P 500's growth, and very decent profit margins and the capital allocation to its shareholders that they do have, I believe 20 times earnings is the market average. Well, nowadays it's a lot higher than that, but 20 times earnings is historically the market average, and I believe this is a market average company and probably slightly better than the market average company. So I have no problems putting it down at 20 times earnings. And on the low side, to be fair, we've got nearly 100% upside. And on the mid side, we're getting 115% excluding share buybacks, and with share buybacks and the real big upside, 183% upside, which is very good. You guys know me, I buy for 2 to 5 years, I aim for 100% upside, and when the low numbers are nearly showing 100% upside, I'm very interested. But the fact that we're on the mid numbers and the high numbers, and you're getting somewhere between 115 to 183, obviously that's great. Now, my ultimate case here is what happens if the market does fall back in love with PayPal. and we do see the market put it to a valuation of like 25 times earnings, which I believe that PayPal could command that sort of valuation with the numbers that it is doing. So if I do just update those numbers to something like a 25 times earnings, all of a sudden you go from 169% on the low side to 254% on the high side. And if they are really let's say that they really execute to 8% growth, and let's say they do actually even grow profit even faster and push up to a 17% profit margin, you're getting close now to 300% upside. Now, obviously, that would be like best case scenario. They execute to perfection and probably even exceed my expectations. But it does kind of show you there that the potential risk to reward. But let's go back to like more realistic numbers. Yeah, I like it. You know, for what seems like a very predictable company to be offering that sort of levels of return, the risk to reward for me is really here. And like I said, I think PayPal is a buy. And to go back to the start of the video, do I believe PayPal is potentially the number one stock to be buying right now? It's one of two. I think it's between PayPal and Adobe. And like I said, when I do the video at the start of the year, and I normally say this is my number one stock for this year, like I said, it's between PayPal and Adobe. And I'm having a think on it. The only thing that's going to help me decide between if it's going to be PayPal and Adobe is Adobe have one more earnings report before the end of the year. So if the earnings report is very good from Adobe, which they have been, like 10 out of 10 good, I might swing to Adobe. If the Adobe's earnings report's like an 8 or 9 out of 10, I might go with PayPal. But yeah, either way, I like it. I originally was going to buy it back as a mid-sized position. I've got to look at the levels that it's fallen to now, and I am really thinking about a PayPal coming back to a top 5 holding, and maybe even consider breaking it into a top 3 position right now, because I really like it here at these levels. And I love the opportunity when we have stocks that just go lower and lower and lower, and yet financially I think they've had a cracking year. And well, that's not even my opinion. Like factually as well, when you look at the financials are higher, going up in the right direction. And when you have a stock that financially goes up in the right direction, the stock price should follow. Now, obviously in the stock market that doesn't always happen directly, but to see how disconnected the financials are to the share price right now, the share price should be a lot higher right now compared to those financials. And the fact it's even declining on a year where the profit is up however much it is this year, and the revenue is up how much this year, it's incredible, absolutely incredible. You start looking and thinking, if they didn't have the share buyback, where would PayPal be right now? Yeah, I like PayPal, and that's my full thoughts on it. It's a long time since I've given like a sit down dedicated video on the YouTube videos for it, so hopefully it was useful. Apart from that, I'll see you in a bit. I don't know if I'm going to do another video this weekend. I'll see. It's a pretty busy weekend, so I might not do one on Friday. I might not do one on Saturday. Sunday, if we do get to 20,000 subscribers, I might do one on Sunday. If we don't get to 20,000 subscribers, I might see you on Monday. I might have a little bit of a long weekend break because it's been a bit of a busy time. So, yeah, I'll see what happens anyway. So thanks for watching, guys. See you in a bit.